On behalf of DM Capital, I welcome everyone to Q2FY22 Earnings Conference Call of NCC Limited. Today, we have from the management, Mr. Y.D. Murthy, Executive Vice President, Finance, Mr. Krishna Rao, Executive Vice President, Finance and Accounts, Mr. P.V. Vijay Kumar, Vice President, Finance, Mr. K. Durga Prasad, Joint General Manager, Finance. Without much ado, I'll hand over the call to the management for the opening remarks, which will be followed by Q&A session. Over to you, sir.
Yeah, thank you, Mohit. Good afternoon and welcome to all the participants. I am Y.D. Murthy, Executive Vice President Finance at NCC. I will briefly make some opening remarks, and after that we can go for a question and answer session. Our board has met today in the afternoon and declared the second quarter results. You must have seen all the results. Before we take up the second quarter results and also the future prospects for the company, I would like to briefly make some general comments. After that, we will discuss the second quarter results. As you all know, the Indian economy is expected to grow by about 9 to 9.5% in FY22, having shrunk by about 7.5% in FY21. We all know why FY21 was a bad year, not only for our country, but all the countries, for the global economy as well, because of the pandemic. Everybody suffered, but now all the countries are also bouncing back. The Indian economy is likely to redeem the losses of FY21 in the current financial year by growing at say 9.5% or so. And as far as the construction industry is concerned, it has shrunk drastically in FY21. The shrinkage in the construction industry about 12% or so. That is, when the economy shrunk by about 7.5%, the construction industry has shrunk by about 12%. That is FY21. Now we are again looking at a bounce back. The COVID is behind us. Things are falling in place. Workers are available at the project sites. Raw material is available at the project sites. There is no disruption. Supply chain is intact, and things are looking up. And also, we have reached pre-COVID level execution in all our project sites. And the construction industry is definitely going to do well, better than the Indian economy in the current financial year, though a ballpark number is not available. As far as NCC is concerned, in the first quarter of FY22, we have reported 57% growth in the top line compared to first quarter of the previous year. And in the second quarter, where the results are declared today, we have grown by about 41% as compared to second quarter year. So things are definitely looking good for us. But in the board meeting, our board earlier meetings also, our top management and also board felt they will not be able to provide a guidance, mainly because the third wave of the pandemic is expected. Still some strain is there in certain pockets of the business. So officially there is no guidance, but based on the first quarter performance, second quarter performance, and the order book that we are having with us, which is around 39,000 crores, we are confident that the performance of the company for the year as a whole will be in the region of 20 to 25%, which can be expected as a reasonable performance compared to Indian economy growing at 9.5%. As far as the order book is concerned, things are looking good for us. There is a good traction in award of orders. In the first 6 months of the current year, we already bagged about 5,600 crores of orders, and in October we have become L1 for some orders where the LOIs from the client are expected in this month, in the month of November. And we are looking at order accretion of about 14,000 to 15,000 crores in FY22, out of which about 5,600 crores has already been received in the first half of the current financial year. As far as the working capital cycle is concerned, we have seen a distinct improvement, has improved, particularly the central government agencies like marquee companies like National Highway Authority, All India Institute of Medical Sciences, defense projects. They are all AAA rated companies, and the payment cycle has improved substantially. Last year also, the Finance Ministry has given a direction to various government agencies to see that the payments are released faster and quicker to construction contractors, so that the wheels of the economy keep moving, and that also helped us immensely in terms of payments. And also, as you know, the Reserve Bank has come out with a soft loan called the COVID loan, about 10% of the fund-based limits of the companies. In the process, we got about 150 crores of loans from our consortium banks at a concessional rate. That also helped us immensely in terms of maintaining our liquidity position without much difficulty. And there are some pockets of problems in terms of payments, particularly in the state government agencies, mainly because they are focusing more on welfare measures and healthcare measures, and the payments to contractors are happening, but with some delays there. Particularly as far as NCC is concerned, we have seen delays in the state of Andhra Pradesh and Telangana, but we are again taking up the matter with the agencies there, and hopefully the payment cycle should improve by March 22. As far as the order book is concerned, we are sitting on an order book of nearly 39,000 crores, predominantly three verticals, that is buildings, roads and water projects put together constitute about 75 to 80% of the order book, as well as the turnover of the company. We have got strong execution capabilities in these three verticals, and we have a leadership position, and the contribution from these verticals is definitely going to be strong in the third and fourth quarter of the current year also. Likewise, we are looking at other opportunities, particularly in areas like mining, where we bagged substantial orders in the recent past, and we are able to execute also without much difficulty. That is likely to continue. And as far as the macro environment is concerned, the government of the day is very keen on implementing the NIP, that is the National Infrastructure Pipeline. So because they realize that there is a deficit of physical infrastructure across the country, and they want to saturate the position, and a huge order award is happening in various segments, and we are nicely positioned to capture those orders, and we are confident that about 14,000 to 15,000 crores of fresh order accretion in the current year is possible. Though officially we have not given any guidance for order accretion for FY22. Out of these, already 5,600 crores is received in the first 6 months of the current year, and we have become L1 for about 2,600 crores of orders, and balance orders are also likely to come. And we are focusing on Jal Jeevan Mission projects, where we had some success in UP. We got orders of about 6,500 crores, though there was some delay in execution, mainly because of the preparation of the project documents and approval by the government agencies. But the speed is likely to pick up. And also other states are also planning similar Jal Jeevan projects in their respective states. I will definitely participate there also. We are also looking at affordable housing projects. We have done number of projects in the state of Andhra Pradesh earlier, and the other states also we are participating in affordable housing. This is also a good area of future growth for the company. And likewise, the Central Vista project in New Delhi, the Parliament House and other buildings, we started participating in the bidding process for the various building projects there. We are also participating in metro rails that present about 3,500 to 4,000 crores of our order book is coming from the metro rail projects. We are doing 2 projects in Pune right now, and Mumbai we are doing 1 project. Nagpur we are doing 2 projects. Bangalore we are doing a project. Likewise, as and when opportunities are there, we participate in bidding for metro projects and try our luck there. Recently, we started bidding for high-speed rail projects. There is a bullet train projects. We have tied up with like-minded construction companies. Though we were not successful in the recent bidding, but we will continue to participate in those projects. All in all, we are confident that order acquisition should be pretty strong. We have got a strong execution capabilities, and a third and fourth quarter we are expecting it to be far better than the first and second quarter. So basing on all these things, we are looking at a top line growth of 20-25% in FY22. That is what I thought I should bring to the notice of the participants. And also, the banking system has supported as well. We have got most of the limits for FY22 tied up, and soon we are planning for execution of the documentation. Bank guarantee position also has improved nicely, mainly because of the initiatives taken by the Finance Ministry by reducing the performance guarantee value in proportion to progress of the project. In the process, last 18 months, we were able to get back about 1,000 crores of bank guarantee limits available to us. So the availability of bank guarantee limits also improved nicely, so that we can take up bigger projects as we go forward. We have got good support from the banking system in good measure, and our accounts are always standard and regular with all the banks in the consortium. They are quite happy with our account and they are supporting us, which is a big positive as far as NCC is concerned. And I am very confident this kind of support will continue in the near future also. Now I request my colleague, Mr. Krishna Rao, to talk about the second quarter results.
Okay. Thank you, sir. Thank you. Welcome to all the participants. I am Krishna Rao. The order book stands at the beginning of the financial year, 37,928 crores. Orders received during 6 months' time, 5,611 crores. And value of the works executed during the 6 months, 4,428 crores. Hence, the order book stands at the end of September, 39,112 crores. As far as the performance for the Q2 is concerned, revenue including other income, 2,223 crores, and the corresponding quarter of the previous year, 1,978 crores, a growth of 41%. Gross profit for the current year Q2, 397 crores, corresponding quarter 337, growth of 18%. EBITDA 327 crores, that works out to 10.8%, and PBT 130 crores, that works out to 5.8%, and PAT of 104. There are the specific issues during the quarter which I will brief. There is one exceptional item of 34.6 crores. We have in one of the projects where additional built-up area of 36,109 square feet has been granted. That works out to 34.60 crores. This is an exceptional item. And from these, we have also taken out a knock of 3.46 crores, the provision for investment. Net of these two, is 31.1. This is only the exceptional item during Q2. The other figures, salaries, there is an increase of 23 crores. This is because of that the increase of volume, number one, and the increase of the salaries for the staff effective from July, and the number of employees also headcount has gone up. The administrative, despite the increase in operations, only 9 crores is the improvement. And interest and finance charges, despite the improvement in the usage of the working capital, there is a reduction in working capital, which I will be able to brief you later. This is primarily because of the rate of interest reduction, number one. And as my colleague mentioned, more BGs have come back because of the government notification. These are the numbers. And with regard to the consolidation, for the Q2 of current year, the consolidated numbers are revenue including other income 2,601 crores, corresponding quarter 1,744 crores, growth of 49%, and the gross profit for the Q2 is for 35 crores, corresponding 374, growth of 16%. EBITDA for the Q2 is 226 crores, that works out to 10.3. PBT 150 works out to 5.8. PAT is 114. This is attributable to shareholders, and this works out to 4.4%. These are the numbers, and the salaries, administrative, etc. are of routine. I will take up the division-wise the order book. Building division stands at 21,157 crores at the beginning of the financial year, works out to 56%, and the closing is 22,383, works out to 57%. Roads 1,954, that is the 5%. The closure is 1,337, 3%. Water and railways at the beginning of the financial year 7,078 crores, that works out to 19%. And at the end of the half year, 8,469 crores, that is 22%. Electrical division 2,438 crores, 6% represents. Closure is 2,122 crores, 5%. Irrigation stands at same 6%, beginning 2,442 crores, and closure is 2,314 crores. Mining 2,592 crores at the beginning, represents 7%, and the closing 2,244 crores, 6%. Others is 251 and 229. The closing order works out to 39,112 crores. Now that the receivables for the period ended is 30th September 20. Outstanding is 2,601. It is comparable to corresponding as well March. Data's collection period is 116 days. And the capital expenditure, the budget for the year is 250 crores. The Q1 capex is 41 crores, and the Q2 45 crores, together 86 crores in a half year. The debt funds movement is at the beginning of the quarter, that is the 1st July 2021, 1,936 crores. And the working capital and machinery loan increase is 190 crores. Repayment of the term loans is 24. So the debt position at the 30th September is 2,102 crores. That is 166 crores. We have utilized working capital more. And the consolidated basis, the debt is 2,316 crores. For Q2, 181 crores is the increase compared to the at the July 21. And there is a reduction of interest at 0.43, where we have the savings in the bank interest. As far as the AP is concerned, we were able to get back 82 crores, the performance and the retention money BGs. There is no improvement with regard to the outstanding status. The status stands as it is. And the cash flow for the quarter is cash flow generated from the operations 25 crores. Cash flow generated from investing activities 5 crores. Cash flow generated from financing activities 2 crores. As a result, net increase in cash equivalents 32 crores. And on a consolidated basis, the cash flow stands as cash flow generated from the operations 42 crores. Cash flow generated from investing activities 0.5 crores. Cash flow generated from financing activities 9 crores. Net increase in cash equivalent is 52 crores. With regard to investments, loans and advances to the subsidiary, there is no change except a reduction in loans and advances from NCC Infrastructure. We have received 12 crores. And one of the foreign Nagarjuna Constructions, 7 crores we have received, and there is no change with regard to the others. With regard to the balance sheet numbers, investment in property has gone up to the tune of 36 crores. That is what the additional area, built-up area. Inventories has gone up to 591 crores by 64 crores. These are only the changes. The other numbers more or less looks comparable to the June. And these are all from my end. I now leave this to my colleague. Sir, please take over.
Thank you.
Thank you, sir.
Just one or 2 points I will tell in addition to what Krishnada has mentioned about the quarter. The finance cost is at 116.34 crores for the second quarter of FY22. There is a slight reduction in the finance cost compared to the previous quarter, second quarter of the previous year, where it was about 117.72 crores. As far as the bifurcation of the finance cost is concerned, the 116.34 crores comprises of interest on term loans 6.4 crores, interest on cash credit and WCDL 42.5 crores, interest on mobilization advance 32.6 crores, interest on others about 5.34 crores. That is as far as the interest cost is concerned. Total is 86.8 crores. BG commission 23.2 crores, LC commission 4.2 crores, bank other finance charges 2.01 crores. So the total finance cost for the second quarter 116.34 crores. Likewise, the investments exposure to group companies, that is loans and advances to group companies and investments in the group companies by way of equity put together remains more or less same at 1,272.06 crores as compared to 1,284 crores in the at the beginning of the quarter. As far as the mobilization advance is concerned, it is around 1,643 crores, and retention money is about 2,108 crores. Cash and bank balance are 422 crores, out of which 400 crores is on account of fixed deposits given to banks. Inventory is about 591 crores. Trade receivable is about 2,600 crores, and the trade payable is about 3,703 crores. That's all from our side. Now I request the participants to ask their questions, and our request is please see that each participant will not ask more than 2 questions, and the total number of participant questions that we take up will be limited to about 20 because of the paucity of time. Please go ahead.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. A reminder to the participants, if you have a question, please press star then 1 at this time. The first question is from the line of Parikshit Katpal from HDFC Securities. Please go ahead.
Hi Murthy sir, congratulations on a decent set of numbers. So my first question is that earlier in the call you said that the second half will be far better than the first half of this financial year. So, but if I see you have not given any guidance, but you have indicated 20 to 25% growth, which is about on a higher side, 9,000 crores of turnover for this year and 5,000 in the second half. So 5,000 crore turnover is about 10% growth versus the second half of last year. So is this guidance very conservative? Because we were expecting much far better number. So not the guidance, but the numbers which you have indicated was like 20 to 25%. So is it very conservative, sir? Because it looks like very low growth for the second half YOY.
I see the Indian economy is growing at 9.5%, and I am projecting will grow at 20 to 25%. Which is more than double that of the growth of the Indian economy. It is not conservative, but I agree with you, there could be a possible upside to what we are projecting. Beyond that, I cannot tell you because the board has not given any guidance.
Okay. Second thing is, sir, on update on the land monetization. So what's the status on the payments? When do we expect? And if you can just quantify over what time frame the entire money will be realized?
Mr. Durga Prasad, will you answer this question?
Yes, sir. So, good evening. As your main, we are focusing monetization of NCC Vizag Urban. So management has identified potential investor, unnecessary term sheets have been signed. Process has commenced in the month of October. So make arrangements for payment of revenue sharing amount decided earlier. Accordingly, land will be registered. And so total amount inflow expected from this transaction 375 crore, and we are expecting about 314 crore end of March. The balance will be paid by June 22. So this is the so it is going as per schedule. So we are confident of closing this deal.
Okay. Just last thing on the JJM projects in UP, sir, out of the 6,500 crores of orders which we had earlier, so how much of that has been executed or booked in the revenue? So if you can just update on that.
Krishna Rao, can you tell that?
That question will you please repeat?
So we have in UP, we have the JJM projects of about 6,500 crores, right, order book. So just wanted to know how much of those works have been executed. So have the execution started, and if yes, then how much of the revenue has been booked total overall, and how much in this quarter?
Yeah. With regard to there is the DPR work part is completed. Now that the initiation has started, the turnover not much is booked from these projects. Is going to start from December onwards.
Okay. And how much you are expecting in this year, sir? In the fourth quarter, how much you are expecting this order can be executed in this year out of the 6,500?
Sir, but the third and fourth quarter will be able to have some idea.
Okay. Okay, sir. Those are my questions. Thank you and all the best, sir. I'll join in the queue for more questions.
Thank you. Before we take the next question, a reminder to the participants, please limit your question to 2 per participants. You may rejoin the question queue if you have a follow-up. The next question is from the line of Ankur Sharma from HDFC Standard Life. Please go ahead.
Yeah. Hi, sir. Good afternoon. 2 questions on the balance sheet. One, your other current assets at almost 6,400 odd crores. So what is this? Is this, it's gone up also when I look at it on a YY and over March as well. So is this unbilled revenues sitting here, and therefore we've seen this number go up? And by when do we start seeing this number come down actually? From this high number.
Krishna Rao?
Yeah. Unbilled revenue, because the number of projects execution is increased. As a result, the unbilled revenue is also increasing. This is one part. And for some projects, you are aware, depends upon that the milestones set. Yeah. The unbilled is going to convert it into the billing. So this is the continuous process, and which we are also equally keen pursuing with the clients for completion. So based on that, the completion of the milestones and the completion of the works, we are going to raise the bills. The more the projects we take up, this unbilled revenue is going to go up on a continuous basis. This cycle is happening on a continuous basis.
Okay. So we can only expect this number to go up, right, on an absolute amount. Okay.
The more the turnover, more unbilled revenue, and unbilled to billing is a continuous process.
Okay. And secondly, on the debt on the books at about 2,100 odd crores, as of the quarter end, where do you kind of see this number stabilizing by the end of the fiscal?
The debt is likely to come down to about 1,800 crores by end of the current financial year. Definitely about 300 to 350 crores reduction we are expecting, and we are keen on maintaining a debt equity of 0.3:1 by the end of the year.
Okay. Fair. Well, thanks. That's all.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment. Please go ahead.
Good afternoon, sir. I hope my voice is reaching you.
Yeah. Please go ahead.
My simple question is, as compared to the first 6 months, next 6 months will be better? And if it is so, approximately in terms of percentage, can you quantify?
I told you, we are looking at a top line of around 9,000 crores as far as the standalone balance sheet is concerned. And now we have done a top line of about 4,135 crores for the first 6 months. In the remaining 6 months, that is in the second half, we have to do about 5,000 crores, which means about 2,500 crores in the third and fourth quarter each. So we are very confident that should not be a problem.
Sir, but then PAT margin will remain, will be constant, or it will be going up?
PAT level further increase may be difficult because we already reported a PAT margin of around 3.7% for FY22. The EBITDA margin, some improvement is expected. EBITDA we have reported in the first half around 10.7%. Whereas we are confident that for the year as a whole, FY22, the EBITDA margin can go up to about 11% or so, which means in the second half, the EBITDA margin will be in the region of 11.25.
Okay. Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to the participants again, please limit your question to 2 per participants. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good evening, sir. So my question again is on the execution which we can expect in the second half. So, historically we've had the capability to do 3,000 crores in a good, seasonally good quarter, and probably we have a very strong order book. So why do you think we can probably be restricted to 2,500 crores? Is it because the payments coming from the clients are not supporting that level of execution, or there's something else which you think is stopping us from doing 3,000 crores every quarter for 2 quarters?
No, they are talking of the third wave of the pandemic. That also we have to keep in mind. We do not know how it will pan out. Already in Europe, in US and China, some new cases, new variants are found. when they will reach India, to what extent they will affect the people. So we wanted to be somewhat conservative, and we wanted to see that we deliver on what we have promised. That's why the figure of 9,000 is given for the year as a whole. But anyway, as I told you once again, it is not the official number, but based on the growth in first and second quarter, and based on the general pickup in the economy, we are confident that we deliver about 20-25% top line growth for the year as a whole. And definitely that is achievable.
Okay. So secondly, in terms of, can you highlight what is the AP exposure, both in terms of, the gross exposure in terms of receivables, unbilled, etc., and net level of exposure from AP?
Yeah. My colleague Mr. Durga Prasad will do that. Before that, I will give you a macro picture. The payments are not coming in the current financial year. AP government agencies have not paid monies to us. In some cases, we have requested them, and we have adjusted the receivables against mobilization advance paid to us. Thereby, about 200-250 crores has come down in the receivables. The balance receivables and also balance payment, we are talking with the government agencies at the highest level possible. They have got government approval for borrowing into bank with guarantee, government guarantee as security. They are in the process of tying up of the debt, and the debt is primarily meant for payment of the outstanding dues of contractors like us, and also for completing the project. Balance works of the project is to be completed. AP TIDCO got approval for borrowing up to 6,000 crores with government guarantee. Likewise, AMRDA, Capital City Development Agency, they have got approval to borrow up to about 3,000 crores. Once those things are in place, our payments will improve in the second half. Now, actual numbers as on today, I request my colleague Mr. Durga Prasad to give it to you.
Yes. Good evening. So, coming to AP project, so Capital City and other projects, we normally internally classify as Capital City because it's struck and other projects, running projects. So, I'll just tell you, receivables from running projects is 281.95 crore, and the struck projects Capital City, so let us go 103.20. So total receivable is 385.15 crore. Revenue is 246.72 crore from projects and 120.38 crore from city projects. Also together 367.1.
Sorry, but there is a disturbance.
Some disturbance is
Not
coming.
able to capture the numbers.
So it's from the line of Mr. Durga Prasad.
Yeah, I'll share these details.
Yeah, I'll speak to you.
Yeah. Okay.
So just last question from my side, YD sir. Also, apart from AP, are there any significant delays in some of the other states that you can mention in what kind of projects, and what is the quantum of outstanding from some of the states which historically have been a problem, like maybe UP or Jharkhand or some of these states?
In Telangana also we are facing difficulty in terms of payments. Some delays are there. Other than these two Telugu states, in UP, our electricity bill payments are delayed, but now payments have started coming, so that will even out without much difficulty. So right now the problem we are facing is from these two states, and as far as Andhra Pradesh is concerned, I have already mentioned they are in the process of tying up of debt, and the debt proceeds will go to various contractors like L&T, Shapurji, NCC and other contractors to pay the outstanding bills, and also for completion of the balance works in that state. That is the position now.
Okay, sure. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from PhillipCapital. Please go ahead.
Yeah, good evening, sir. Thanks for taking my question. So there's just two questions from my side. One is on the margins front. The margins in this quarter were a bit soft than expected. So we know it was a monsoon impacted quarter, but generally our margins have been in the range of 11.5% or so. So was it the impact of the commodity prices or any other thing which led to these kind of lower margins? And so in that respect, what exactly is the nature of our order book? How much of our order book has passed through contracts, and how much are we able to get through this? So, and with all that, what is the kind of margins that we are expecting for the full year as a whole?
Yeah. For the full year EBITDA margin, already Mr. Moti has suggested that we are going to end up at around 11 to 11.25. And with regard to the price increase of the imports, you are aware this is going to affect the margins to the tune of 0.5%. One, and out of the total order book, around 72% of the order book we have the price escalation, that is the coverage from the contract agreement. Hence, we are shield protected. So there may be the effect around 0.4 or 0.5% on the margin. However, we are going to achieve that around 11% EBITDA for FY22.
Okay. And so given that this commodity price hike, raw material price hike was basically mainly this year, can we expect that margins next year, keeping everything constant, next year margins should revert back to their normalcy? Given that you mentioned that now the bids that we are submitting, we are taking those higher prices into account.
Since the price volatility is not expected, we don't know how the trend is going to be. It all depends upon the price momentum.
Okay, sir. Sure, sir. So then my second question was on some of the projects. Sir, I think at this point of time, as Mr. Murthy also highlighted, the Central Vista project, the bullet train project, these are some of the large projects that are there in the markets right now. But I think from the initial rounds of bidding in both bullet train and the Central Vista project that we have seen, we failed to win any of the projects in both these, any of the contracts in both these projects. Many cases we've been L2, and in some cases we've been a little below that as well. So is it that, so what is our perspective on that? Is it that our bids are more conservative than the players and we are being conservative because we have a very good, strong order book? Or do you think there will be plenty of orders in these projects going forward that we should be able to win them when they come?
Yeah, see, as you know, we as a company, we never bid aggressively for projects. We don't want order book to increase just for the sake of order book. But we need to keep the margins also in mind, and we don't want to sacrifice the margins and get the fresh orders. As far as the bullet train is concerned, it's a new area we have entered, and we have got partner with us, Tata Projects. So together we have assessed the costing and all that, and accordingly we have bid it. But going forward, we will see. Things should definitely improve. And likewise, Central Vista project also, it is a 20,000 crore project, and as far as I understand, about 4,000-5,000 crores has been bidded out and awarded. We are not successful, though we are participating. But definitely, we have got a strong presence in the building segment, and all these buildings are coming up. We will definitely participate in the rest of the buildings. You see, this is the process now. It is difficult to predict what we will get it. Other players are also there. But we are confident we will get our share of the projects.
Sure. Thank you so much for taking my question, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Vijay Kumar from Spark Capital. Please go ahead.
Yeah. Good evening, sir. Can you give the percentage of the order book coming from central government and central government related entities?
Yeah. Krishna Rao, can you do that?
Yes. Yeah. One moment, please. Central government and is around 30%. State government is 40%. PSU is 20%. ADB, IIB is the balance 15%.
Okay. So the reason why I'm asking it is central plus PSU, which is 30 plus 20, around 50% of our order book. In light of the recent document from Ministry of Finance through Department of Expenditure, where they have given general instructions on procurement and project management. So there they have given some new instructions specifically on how payment have to be done within 10 days of bills being submitted, all these things. So how do you think this general instructions will have an impact on us positively?
Yeah, that will be very good for us. If they implement it, definitely a step in the right direction. And in fact, during the COVID times, the Finance Ministry has given directions to various central government agencies like the National Highway Authority and other agencies. And in last year, between June and August 2020, National Highway Authority has released payment of nearly 30,000 crores to various contractors based on the directions given by the Finance Ministry. And also, there is a realization on the government agencies and also from the government departments. When a contractor has done the work and the bill is certified, you should not withhold the payment unnecessarily, because when you pay the contractor, he is in turn paying to the suppliers, to the subcontractors, to the labor, which means the wheels of the economy keep moving, which is very important for the economic cycle to improve. So that realization on the part of government agencies is also helping us to see that the payment cycle improves.
Sure, sir. So related question, in the same document they've given procurement through the quality cum cost based selection criteria. So do you think this will be implemented in some of the projects that we are bidding for in the future?
I do not know, because I have not seen the document. I will check with our procurement department and try to understand that.
Sure, sir. I'll touch base with you for this later on. Thank you and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good evening, sir. So the first question from my side is, can you give us the revenue breakup segment-wise for Q2 and Q1 and last year same period, and what is outstanding unbilled revenue as on September?
Krishna Rao, can you please?
This unbilled revenue, the age-wise analysis is not ready.
Okay.
No, but revenue you can give 6 months and 3 months.
6 months and
current
month. Yeah. The 6 months revenue 4,135 crores. You want to have the division wise?
Yeah. That is what he is asking. Yeah. Shall I give it?
Yeah, please, sir. Not able to.
Buildings, I am giving the revenue for 6 months. Buildings division 1,597 crores, that is 36%. Roads 712 crores, 16%. Water and railways is almost nil, but they are clubbed together. 881 crores, that is about 20%. Electrical 510 crores, that is 12%. Irrigation 128 crores, 3%. Mining 542 crores, 12%. Others 55 crores, 1%. international just 3 crores. The total billing, the total consolidated construction business, both domestic and international put together, is 4,428 crores.
And any comparison for last year same period, is it possible to give, sir?
We told you, we have reported a top line growth of 57% in the first quarter compared to first quarter of last year, and 41% in the second quarter compared to second quarter of last year.
So Q2 is possible, or I can take it offline, that's fine.
Q2 also division-wise we don't have, but 41% growth is there in the top line.
Fine. Sir, on the gross margin, so we have seen a gross margin of around 18% in the first half. So how do we see our gross margin going up? Because we have seen our operating leverage has been really good in terms of other expenses and employee costs a bit high, but how about the gross margin? So any thought on the gross margin, sir?
Gross margin in the second half may go up by about 0.5% or so.
Okay, so we can say
18.5%. That's right.
And the last question is on the Sembcorp Tata issue and the bank guarantees. So what is outstanding bank guarantees, fund and non-fund and utilization, and the Sembcorp Tata issue status? Thank you.
You see, already the fund-based debt position my colleague has given. As far as bank guarantees are concerned, I will give you the number. Just a second. The outstanding bank guarantees at the end of second quarter is 6,707 crores. The limits available is about 9,499 crores. That is about 71% utilization. As far as second quarter, end of second quarter position is concerned.
And fund base also, sir didn't give the total number. He said 2,000 crore is the debt number, 2,100 crore. So that is fully utilized, assuming?
Debt figure we have already given you, Okay, I'll give you.
No, I have the number, 2,100 crore, but I'm asking the utilization level of the fund limit. Any working capital limit, what is the utilization level?
Working capital limits utilization is 1,815 crores at the end of the second quarter. Out of 2,100 or so available to us, actual utilization at the end of second quarter is 1,815 crores.
Got it. And sir, Sembcorp Tata issue status?
Sembcorp, the arbitration, they got High Court approval to conclude by April 2022. Also, the award is likely to be received only at that time. Because of the voluminous documentation, because of delay on account of COVID-19, etc., it got delayed. As far as Tata is concerned, we are looking for an out-of-court settlement. We are discussing with them directly and parallelly, because the claims of both Tata and NCC was rejected by the High Court in Singapore. So we are going for an out-of-court settlement.
So when is it likely to complete, sir?
By March 2022.
Okay. So that's it from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much.
I'm so sorry to interrupt, but may I please request you to speak a bit louder?
Now it's better?
Yes, sir. You may go ahead.
It's better, sir.
So I just wanted to understand on FY23, any sort of outlook that you have shared or would be willing to share for FY23 in terms of top line or margins would be quite helpful. And my second query is on your absolute interest level, which is currently at 115 crores. So how do you see that interest cost panning out over next maybe 2 to 4 quarters? Yep.
Okay. As far as FY23 is concerned, normally what we do is, in the fourth quarter of FY22, that is on the eve of annual closing, we prepare the business plan for FY23 for the next year, present it to the board, discuss it division-wise, and accordingly we freeze the business plan for FY23. So that exercise has not started, so I cannot give any numbers for FY23 other than saying that based on the order book and the expected further order accretion, FY23 also there is a good possibility of top line growth of say around 15 to 20%. What is the second question, sir? Bank rate.
Interest.
You see, the blended interest cost, already my colleague has mentioned, it has come down to about 8.7%, which is a good number. The banks are quite happy with us. They are passing on the policy rate reduction of the Reserve Bank to companies like us. That's why the blended cost of borrowing, which was as high as 9.5 to 10% 1 year back, now has come down to about 8.7%. And one more thing we are doing is, based on the Reserve Bank's guidance to various banks in the country regarding operation of the CC accounts, because if the bank is not having more than 10% share in the consortium, the CC account will become a collection account. So we are asking those banks to convert the CC also into WCL, whereby there is some interest reduction that is happening. So these measures have helped us quite nicely as far as the interest rates on bank guarantees on bank loans are concerned. But we are talking about the finance cost. Finance cost not only comprises of interest rates on the banks, but also interest on the mobilization advance and bank guarantee commission and also LC commission. All put together in the in the second quarter is about 116 crores, which is around 5% of the turnover of the company. We are trying to maintain the finance cost between 4.5 to 5%, and as the turnover improves, we will be able to bring it down below 5%, the total finance cost. Maybe it will happen in the next year. Thank you.
So 4.5 to 5% of top line in finance cost is what we are looking at, right? Which includes the bank guarantees, the mobilization advances, as well as your interest cost, right?
Yeah.
Okay, 4 to 4.5 to 5. Okay, that's it from me. Thank you.
Okay, thank you. Now we'll take up the last two questions.
Sir, last two you want to take?
Yeah, that's all.
Sure. We take the next question from the line of Parvez Akhtar Qureshi from Edelweiss Securities. Please go ahead.
Hi, good evening, Modi sir, and congratulations for the great set of numbers. So two questions from my side. First, just wanted to confirm, you said that we are L1 in some 2,600 crore of orders. Is that correct?
Yeah, that's right.
Oh, okay. Great. And with respect to, future order intake, clearly we have done very good in the first 6-7 months of this year. For the year, you are saying 14,000-15,000 odd crores. So which are the segments where we are, witnessing this good traction? Are these largely state government orders, or are we focusing on central government agencies going ahead?
Yeah, of late we are focusing more on central government projects, and definitely preference will be given for such kind of projects. And in the next stage, we are looking at the central government assisted projects, like Jal Jeevan Mission is there, where 50% of the project cost is coming from the central government as a grant, and the balance 50% has to be provided by the state government. Such projects also we are looking at because there is a comfort there. Likewise, affordable housing. There also central government subsidies available under the Prime Minister Awas Yojana. About 1/3 of the project dwelling unit cost is coming from the central government by way of a subsidy. So such projects also we are taking a keen interest on that.
Sure. And lastly, what is the capex that we have done in H1, and what is the target for the full year?
Full year target is 250 crores. Krishna Rao, can you tell me?
Yeah, First half year, 86 crores has been done.
Sure. Thanks from my side. All the best.
Okay. Thank you.
So this will be the last question, please.
Sure. Well, ladies and gentlemen, this was the last question. I would now like to hand the conference back to the management for their closing comments. Over to you all, sir. Members of the management, you can go ahead and give your closing remarks if you have